Hello, Namaskaram, Radhe Radhe. So, Hare Krishna, let's talk about hammer candlestick thing. We will talk about earlier video. I think we will did only on the hammers thing, but let's think from a downtrend and uptrend point of view. Before that, let's look at the disclaimer thing. Then let's go to the candlesticks. I think this is what it is: upper shadow, lower shadows, and this is for the black or red, this is for the green or white. So these are the things which I explained very detailed in other videos. Please go through those videos. I think let's go through this one. Small or no upper shadow. Basically, in the earlier video I shown, there is no little shadow is also not there, but there is a possibility for a hammer. It is some hammers, if you have seen industrial hammers, some hammers have a little bit of topper edge. I don't know why they design like that, but some hammers don't have the upper edge, so it's like upper way, but it has a very long bottom just to hold on very strong. The if you look at the patterns here, so after a complete downtrend, if you see something like that, it is technically market is signaling you I'm going to an uptrend. So the first thing you have to see is it in a downtrend the hammer has formed, or is it an uptrend the hammer is formed? If the uptrend is the hammer is formed, that is not a strong candlestick pattern or uh, hammer pattern. So ignore that part. If it is happening in a downtrend, I would definitely get in. So bullish hammer candlestick pattern is a potential trend reversal, the small body at the top and longer wick, indicating stock or underlying asset may be bottoming out. So look at it. Okay, I think I'm going fast. Let me come back. So longer wick shows a strong rejection. Basically, if it is a very long, basically people don't try to sell more at the bottoms. They are trying to buy at the bottoms because it's already been in a downtrend. Small body, the small body near the top ranges indicates a potential reversal. So let me look at the target wise, at least the height of the candle. Look at the height of the candle. If it is 10%, another 10%, definitely you have to. I don't think hammers, I have seen like hammers like 2 to 3%, like 2 to 3% you can definitely look. Long term you have to look at the technicals and support resistance and all those things. Here if you see here, it has a hammer has formed at 3200 and market, it's almost for the next hammer, or you can clearly see RSI was also going up almost up to here. I think I would ride the trade till 60s, RSI 60s, when I buy something somewhere here around somewhere around 40s, and I will write up here considering only these two things, nothing else. And then boom, I think I made around almost like 10-15% in a matter of couple of months. That's a good return. This is for the TCS. Oh, that is a $200 billion company. Gale, another example, it's like the hammer is formed here. You can keep a stop losses here because it is the nearest support level, which can break 91, 97, 95, and it went up to almost like 110. So maybe 12-15%. This is also Gas Authority of India Limited. So here also it is somewhere around 40s. It is coming up from here 40s, and boom, it never after the hammer formation, long hammer formation, it did not say it's happening. So these are the few examples I would recommend you go and identify and recognize the shape, confirm the color, analyze the context, and do your own homework, because in stock markets, independent of stock markets, practice is progress. So just go ahead and do it. Confirmation criteria, you can see it if it is a downtrend and if it's moving, and if you have volume supports, please go ahead and take the position. Understand it's downtrend, sideways, uptrend market. If you have seen here, this is obviously kind of in a sideways market. It's almost like 10-15 days, but after a downtrend it's a sideways. It's not after uptrend, it's a sideways. If we see in the earlier example also, after it almost like, I don't know, 10-20%, 10-15% loss, it started something like this. You pick it up, there will be some chances, because on top RSI is also about 40. It is like just trying to make it up. It's just trying to ride. So combining hammer with other patterns as I shown as RSI, MACD will really give you a good probability of winning trades. Managing risk, as I always say, managing risk is very important in your trading rather than your return. Return anyone can manage. A fool can manage a return. Only intelligent can manage a risk. So manage your risk. keep your appropriate stop losses. I diversify. Do not try to go with a single candlestick and single indicator. Try to combine 2-3 things, and that will make a lot much of difference. Identify a pattern, entry and exit. This is very important. Confirm the signal, time and the entry, and keep the stop loss and manage the trade. If the stop loss is not triggered, if the profit is going, sometimes, as I said, enough word is a good word. Take the profits and look for the new trades where you find the new opportunities. Candlesticks patterns. Case studies. Why case studies are important? Because until unless you do as many as case studies or as many as examples or as many as practice, there is no progress. So make sure you do that part. Common mistakes: do not overtrade, ignore the confirmation criteria, excessive risk taking, look for patience. These are very important. If you're not, I mean, when I say look, lack of patience, this you have to have patience inside you. So look, where is it? Don't be a lack of patience guy. That's what I mean. So excess risk taking is also not good. So do not overtrade. Do not ignore the confirmation criteria. And confirmation criteria: market evaluating the reliability of hammer pattern. Confirmation criteria, market environment. These are very important when you are evaluating the reliability. Incorporating the hammer, as I said, keep a screenshot or printout in front of your desk. That will help you. Advanced techniques, there are technical analysis techniques which I will talk in other videos. There are some courses you can join them, but let's go ahead and wrap this video. Thank you and thanks for joining. If you want to know more, I think you can join the below social media handles. Thank you.